Hello everyone, this is Drew from Best of Us Investors working with Mark on the Platinum Trading Platform. So in February, if you have followed the stocks that we have found after analyzing more than 700 stocks or charts every week and invested only 100 shares each, you would have made more than $2,000 last month. Of course, we do see some losses, but we use more than 10 indicators to analyze the chart and make sure that our members minimize their losses and preserve as much gain as possible without taking huge risks. So for more details on stocks that are set up for great trades every day, along with education and chart analysis, indicators, and also want to be part of the weekly Zoom calls with Q&As regarding swing trades and investment, make sure you join our Platinum group and let's successfully invest and make it through this tough market together. So what's new this week, Mark?
Hi, Drew. We had an interesting week with Powell testifying to both the Senate and the House. And then on top of that, we had the little bit of a bank debacle with Silicon Valley Bank. So down markets through the week. Let's go take a look at the chart and see what we have. So here's the S&P 500, and this square right here represents last week. So here's Monday. You can see we started out, we're on a downward trending line. And we blew through quite a few support levels. You can see on Tuesday, we blew through the 20-day EMA, and also we blew through 4,000 level. We also blew through the 50 and the 9-day and closed below that. On Wednesday, we had a bit of an up day, okay, but we still closed a tad bit above the 9. Then on Thursday, we started to get some news from the bank. We dropped all the way down. We blew through the 39.50 level, and we blew through the 200-day simple moving average to close below that level. Then on Friday, of course, with the SVB Bank debacle still, we blew right through 3,900 and closed just above 38.50. Even though we wicked below it just a bit. When we come down, we can see that we have closed as far as the MACD. You can see the MACD is below the signal line. We also have a negative crossover of the slow stochastic, and we have an RSI below 50. So it's not looking good. We blew through a lot of support lines. We'll have to see what happens on Monday. When we go over to the Dow Jones, you can see about the same situation as in the S&P. We started up just a little on Monday, closing just between the 50-day simple moving average and the 20. Then on Tuesday, we had a big candle down. We went through the 20 EMA and the 9-day, closing below the 9. On Wednesday, we could not get above the 9. 9 became resistance. The same thing we saw on Thursday, where we closed below the 200-day simple moving average. And then on Friday, we did wake up, found resistance at the 200-day simple moving average, and again closed down in the Dow Jones below the 200-day simple moving average. This is significant that we're turning more into bearish trend. You can see pretty much 5 days in a row. We come down to the MACD. The MACD is below the signal line. The same we can see down at the slow stochastic below its signal line. And then we have an RSI currently at 31 where we're looking at 50. So it's not looking good for the markets. It's hard to do upward swing trades when the market is definitely moving down. Let's go take a look at some of the trades we made, and we did make a little bit this week with our trades, and we got out right before the disaster hit. So this is Berkshire Hathaway. We got into Berkshire Hathaway on Monday. You can see we had a full candle close the previous Friday above the 9 and above the 50. Actually used 50 as support, even though we wicked down just a little bit. So on Monday we bought with a buy order right about where it closed, came down, wicked, and hit it. Had a nice little gain that day. The following day is Tuesday. Chairman Powell was going to talk to Congress, so I always try to limit my losses. We put in a sell stop limit halfway between where we bought and where it closed. Of course, that hit for a nice little profit from our cost basis here to where we got out here, which turned out to be pretty good because on Wednesday, you see, we had a kind of an up day, but it didn't get back to our cost basis. And of course, on Thursday, we had the news starting to come out about Silicon Valley Bank, and then another down day on Friday. So with our gain, we made about 0.71% or on a 100-share trade, about $221 in one day. So even with a bad market, you need to be careful when people like Powell come out and talk, or you have earnings reports or dividends. Be aware of that because the charts don't really know that. That's something I knew, and it gave us a profit, got us out of the market, and then we could just watch everyone else lose some money here. So next week we're going to have another fun week of reports. We're going to have the core CPI on Tuesday. We're going to have retail sales on Wednesday, and then the core PPI on Wednesday also. And then, of course, on Thursday, initial jobless claims. So we're not done yet with the fund. And then finally, after that, we're going to have some Fed meetings and some decisions on interest rates. So volatility will still be there next week. We're going to have to watch closely as the markets have gone down. We're not going to have very good setups as far as swing trades to the upside. We may have some to the downside, though. We'll discuss that on the Platinum channel on Monday. I hope everyone has a great weekend. And back to you, Drew.
Thank you very much for listening, and I hope you enjoyed this episode. For more details and updates regarding swing trades, chart analysis, and stocks to watch each day that are set up for great trades, make sure you join our Platinum group so that we could get through this tough market together. See you all next week.